Okay, so whew, what a what a week trading was. It's been pretty dull. Of course, that's how it is in December. I'm a little a little bit underneath the weather, but I promised you guys this video, and I'm gonna give you this video. So basically, in this video, I'm gonna teach you basically how to trade dollar pairs. And I'll dib and dab into other pairs too, but the dollar has a mind of its own. And since it has a mind of its own, it's very good to understand how to use the dollar because obviously people love trading gold and silver. Um, GU, NU, USHF, those currency pairs. But before we go over trading a dollar, I want to be transparent about my trading. I'm a swing high, swing low, break and retest trader. I'm not really concerned about looking at because I know a lot of traders spend a lot of time looking at what other traders are doing. Like, all the retail traders are doing this, so I'm gonna do the complete opposite. That's nice. I'm not. I don't. When I see my setup is when I take my setup. Whatever happens from there happens for there. I'm not concerned about if every retail trader is getting into a buy at the same time I am. I'm concerned about, do I see my confluences, and if I do, take the trade. Especially if you're risking 1% each time. What are you so concerned about? Somebody else's trades. Now I'm hearing too much. Like, I'll go on channels from people I used to look at a lot, and they're doing too much analyzing on other websites and seeing what retail traders are doing. Man, look, just trade. Just trade. So, anyways, let's get this set up. So, I'm going to draw some support and resistances real quick. Just two. Now, bear with me. Try to watch this video to the end. If you don't, it's okay. But this is going to be a lot of information, and it will set you where you need to be in your trading. Trust me. So try to watch this to the end. All right. So let's talk about the uptrend. So let's start down here. So the market obviously makes a high, right? Market makes the high, right? Then it comes down to retest the area that it just broke. Then it makes a new high, right? And the market comes down, retests the area, then it makes a new high, right? It keeps making highs until, till higher highs, till it exhausts. All right. So we're at this point, and I think you've seen it in my videos. You're at this point. This is clearly an uptrend. Let's just keep it elementary because we don't need to complicate trading no more. It's not complicated. You don't need all this complicated stuff, putting in a whole bunch of lines and stuff. Just understand this sentiment of the market. So if the market is obviously on the uptrend and we're not looking on we're not really looking at the M15, M30. Let's look at the daily, the H4s. Let's look at higher time frames. If the higher time frame is saying swing highs, this happening, high, exhaustion, high. So now we're here. Your job as a trader, whether that be retail or whatever, is to look for the proper bullish sentiments to take it for the new high. Or you could even just take it to here. You don't need to take it for the new high. I mean, the new high will be great. But if you get the buy off here, stop loss below the area, and you take it for the new high, you're good. Now, let's take that off. Now look at the market. In order for this to be a downtrend, price wouldn't have to take out the previous high, the previous higher high, and the previous lower low. Check it out. In order for this to be a downtrend, because it's uptrend right now, in order for a downtrend to happen, previous higher high and previous lower low needs to be taken out. If this doesn't get taken out, this is still an uptrend. So let's just say it does come down right here and then drops like this, right? This is still an uptrend. It only took out the previous higher high. Now it's at the previous lower low. And usually when you put the fibs in, that'll be the 50 retracement anyway. I wonder, can you do that with these lines? It'd be fun. Oh shoot. Yeah. I think somebody been messing with my settings on here. One of my colleagues. My settings are not on here. I'm gonna have to fix those. I didn't know. Oh, there they are. I'm over here blaming people. All right, so let's see if we can put a fib in there from this swing to this swing. Now look at that. Now we got a 50. We're at the golden zone. Usually when it's at the golden zone, it made it past the previous higher high. Now it's at the previous lower low, meaning it's still uptrend. Usually what happens, it'll just shoot up. You've seen it before. You've seen videos. This move will probably make the next high, or at least come back up here. Now, if it breaks it, then this is obviously a downtrend at this point, because now it just broke this. Then it'll just come down to here, and then on top of that, deep pullbacks like this. There's too much bearish momentum for it to continue up. So it'll just keep trickling down on lower time frames until it drops. So understand that. So let's take this off. Understand, in order for this to be a downtrend, it needs to take out the last previous high and the last previous low. Until then, uptrend. Doesn't matter what retail traders are doing, doesn't matter what concepts you got going on. This is the holy grail. This is how old stock traders used to trade their stocks back in the day. And old stock traders, we talking about millionaires that used to trade stocks before Forex. Now, there's nothing wrong with that. And then I've been trading like this for a year. Never had a problem. Profitable. Never had a problem. You just got to make this work for you. Any trading strategy will work, but you got to make it work. If you don't make it work, then it's just not going to work. All right. So enough of that. Let's delete this. Let's get to the meat. Here's the dollar index. All right. Let me spread this out. So this is the dollar index. The dollar index basically is the dollar versus every other currency. That's what the DXY is. Every currency has an XY, because here's Japan, which is dropping, which I thought it was going to make that move, but it didn't. So JPY is dropping right now, you see, which means all JPY pairs should be flying up. We'll get into that in a second. So, because you only wanted to talk about DXY, that's fine. This is the DXY. When you put the line charts in, let me show you the power of the line charts. I've trained my eye, and again, the way I trade, a 7-figure trader taught all of us that was a part of her program how to trade like this, how to look for support and resistance. So there's a reason. Let's go right here. See all of that? See all the sharp move, sharp move, sharp move, sharp. So support and resistance, or order blocks, or whatever you want to call them, or just all it is both sides of price action that act as both support and resistance. So you can see clearly illustrating. If I come right here, you have, let me put them in so you can see. This acted as a resistance. Those two right there acted as support. We got a whole bunch of support right there. You got a whole bunch of support right there. The bounce off right there. Even that sharp move, that pounced up right here. So obviously support, this is a great key area. And even where we at right now, see the sharp move right there? So by the way, again, we're going back to this because I want you guys to understand this. The market moves in three phases once you understand the trend. Phase number one is the push phase. Phase number two is the exhaustion. Phase number three, lower low. That's if you're on a downtrend. So all you need to understand is what phase you're in. Are you in the push phase? Are you in the pullback phase? Are you in the continuation? Only three phases you need to worry about. All the rest of the other stuff is noise. Are you in the push phase? Are you in the pullback? Are you in the continuation? Once you get this down, once you can start coming to these charts and identifying what phase you in, don't matter what time frame you in, you'll start to get better. Things will get better for you. So here we are. Market did push phase, right? Let's make this the right color because this will be there. Market did the push phase. Here's the pullback right here. Now, push, pullback. Not saying that possibly. Now, when we come down and start finding other levels, see, now we can find other levels, right? If this pushes and it continues, because it failed, look, price failed to make a higher high after this point. So you start using your confluences. There's a possibility, even with this COVID and all this stuff, possibility the dollar can possibly make a lower low. Possibility. So remember, push, pullback, continuation. So that's how I trade. Now, looking at this area, the diamond, of course, is December, so things have gotten kind of slow. I use fractals too because fractals are swing high, swing lows. They help for swing high, swing lows. Now just imagine, see all three of them fractals. If you saw all three of them and put a buy in right now, look where it went, to heaven. So now we got two fractals showing up on this support. This is letting me know that it's not trying to break this support. I mean this resistance. So we might have a drop coming soon. You could even see it on the daily. It's having a hard time, a lot of wick rejections. So if the dollar is bearish, what is gold doing? Gold is the complete opposite of the dollar. Let's go to gold. Gold should be going up. Exactly. Now remember this, mechanically, unless there's inflation news, mechanically, if the dollar is going down, gold will go up. That's how you trade gold. Always come to the DXY and mark up the DXY. The DXY should be your favorite markup thing now. You should come over here to the DXY, mark it up, figure out what's going on with the DXY for the daily. You know, use whatever you want to. You don't have to use my analysis, But as long as you can come over here to the DXY and figure out if it's going to be bearish or bullish for the day, gold should not be a problem anymore. Now, the reason why gold is going up right now is because the DXY is going down. Okay? Now, let me show you something. Let's go to the weekly on DXY. Take a really good look at the DXY. I'm going to give you like 5 seconds. Okay? 5 seconds over. Do you get that? Get this printed in your memory. Let's go over to EU. EU is the complete opposite. Let's show you again. Do you see the comparison? See the M? There's a W. See where it's at right now after this nasty move right here? That's where it's at after that nasty move right here. So again, EU, euro versus the dollar only moves when the DXY move. It doesn't matter what euro is doing for the day. The dollar makes the move for euro. Okay? So once you start understanding how to trade the dollar, which, you know, you come in here, you find your support and resistance and stuff, and I try to do it on a daily and a weekly basis and stuff because I've gotten more advanced with it. Now you're looking at this video. Now you got a lot of work that you got to do. You got to get advanced on it too. It might take a while, but it's going to reap the benefits in your pockets. What I'm trying to say here, guys, is once you understand the DXY, there should be no reason why you shouldn't trade EU and gold way better. Okay? Those are the easiest ones right there. The easier ones. All right. Let's go over to GU. GU is the same way. So we said the dollar's bearish. GU should be bullish too. See? On the week, GU is bullish because the dollar is losing its strength. So since dollar is losing its strength, GU is gaining, going back up. And here's a note. Here's a nice little note for you. That was the previous low right there, right? Check this out. All right, so since this GU is still in a downtrend, in order for GU to regain an uptrend, remember what I said? Remember the rules? The rules of the game? You should. It needs to take out the previous lower, what is it, the previous higher low and the previous lower high. I hope I said that right. So it would need to break this, retest, come here, break this, and retest, and after that we have an uptrend. This will be uptrend after it breaks these two areas. Till then, we're still on downtrend. So you're still looking for sales, even though, you know, you still would possibly be looking for sales if on a higher time frame. But if you don't see the opportunities to take it, then don't take it. But this is a strong momentum to the upside, so this looks like a better move anyway. So let's not be. Let's see. Yeah, right after that rejection off that area. Yeah. This looks like it wants to come back and touch these highs anyway. So GU should start being easier now because you understand the dollar. I'm just giving you scenarios. So once you understand the dollar, like I said, EU will be way easier to trade. UJ will be easier to trade too because UJ is a little UJ is one of those pairs that's a little harder to deal with, but for UJ I would want you to come over to JXY and the dollar. See how the dollar index is still kind of bullish on the monthly. But look at the monthly on the JXY. So that should let you know you should be looking for buy opportunities anyway, because JXY is weaker. Then we can, you can come over here to stuff like U.S. versus Mexican peso. Like I said, the dollar was weak. Look what happened. The dollar is weak. Look what happened U.S. versus Mexican peso. The dollar weakened, peso gained strength, dropped. USD chef, same thing. Dollar weakened, and I think that's going to be the move, that red move right there. It's going to drop. It's been trending on this little thing for a minute, so I think it's going to drop. It's already testing it right now. Then New Zealand dollar. As you can see, the dollar's weak, so New Zealand is starting to push back up. You see, once you start understanding all this mechanical stuff, things get really, like trading it'll get really mechanical. It'll get ultimately easy. So since we're saying that the dollar's weakened, and we'll look at the ZXY, New Zealand Dollar Currency Index, which we don't really have to look at it. We already understand the dollar's weak. So if the dollar's weak, guess what? New Zealand dollar's going up. If the dollar's weak, guess what? New Zealand JPY is going up. If the dollar's weak, GBP New Zealand, New Zealand will start gaining strength. So GBP New Zealand, it might go down, but it didn't, because GBP was a little bit stronger. Let's see. Yeah, GBP was a little bit more stronger than New Zealand. That's why I put this one at the end. But hypothetically, in a perfect example, when New Zealand gets very, very strong or weak, since the dollar's weakening, then New Zealand will go up. New Zealand JPY go up. Euro New Zealand will go down. This will go up. This will go up. This will go down. And then, depending on what AU and NU is doing, this will range. The same thing with Australia. If the dollar's weakening, Australia will go up. AJ will go up. CAD will go up. And, you get it. You understand the correlations, hopefully. If not, I got a whole nother video on that. But again, like I said, I don't want to make this video too long, and I'm still kind of underneath the weather. But once you understand the dollar index, once you understand what the dollar index is doing, and right now I wouldn't be trading anything right now if I were you guys. The market is too damn slow. But once you understand the dollar index and get some practice in, start coming over to the dollar index and figuring out what it's doing, and sit there and watch gold, watch EU, watch it mechanically do what the dollar index is doing. So remember, if the dollar index is bearish, gold is bullish, and EU is bullish, AU is bullish, things of that sort. If the dollar's super duper strong, gold and EU, all them sell off. So hopefully this was enough information. I'll be putting out some more videos, of course, once I get underneath the weather. And I will see you on the next video.